Okay,
Hey,
that's cool.
so you're introducing
Uh,
Philip Bell. All right. So whenever you're ready, you could just go ahead and, you know, give us the good.
okay, just like that. Okay. Um, I'm Phil Bill, the lender. I've been in lending for the past 5 years. Um, Moved out to California from Michigan. Been in the California market for the past 4 years now. The past 4 years. Um,
4 years.
Say it again.
Okay, perfect. So about
Yes.
4 years. 4 years. That's great. So we know you're very knowledgeable, and of course, I know you, and that
Mm-hmm.
you're very passionate as well. So we just
Yes.
want to jump in and talk about what's going on in the lending world. So the first question is about the interest rate. So what's going on with interest rates? We know that there's a lot of buyers. They want to buy, but they're scared. So can you tell us a little bit about the interest rate?
Right now, interest rates are. They're still at a all-time low. Um, if you can do, you can get. FHA is giving 3 point. I just got somebody a 3.375 on the FHA loan. They want to put down 3.5%, right? So that's amazing. Um, Interest rates are. They're if you can get in now.
Now, okay,
Like, yeah, you
definitely.
don't want to wait. Yeah, you don't want to wait, and it
Um,
doesn't matter. It really doesn't matter what your credit score is. You're going to get a low rate regardless, right? Because
Perfect.
right, you're going to get a low rate regardless. If we wait, and especially if this once this pandemic clears up,
Right.
once that clears up, is and interest rates start rising again. Even if you have a 700 credit score, you might end up with like a 4.5, 5% rate,
Mm.
right? Which is, you don't want you waiting yourself out the game at that point, because you
Right.
got to understand, the higher the interest rate, the higher the payment, right?
Exactly.
Which less you're going to be able to afford less. So you want to get in as fast as possible.
Okay. And do you think it'll be any changes with like the debt to income ratio?
Say it again. Say it again.
Ratio? Will there be any changes to like the debt to income ratio? Like how would that work now? Has that changed?
No, no. Debt to income ratio is probably going to pretty much stay the same. Um, it's For the most part, they want you 43 to 45 in that range
Okay.
of your debt to income. Any more than that, technically with FHA, technically you can go up to 50%, and there's a lot of programs that you can use from different lenders that let you go above and beyond that 45%. But you really want they really, to mitigate risk, keep you around that 45. And the majority of loan products going to be around that 45% range.
Okay. Okay. And are they requiring borrowers to have more money in reserves?
As of right now, no.
No. Okay.
Guidelines are changing though, and the way this pandemic is going is really making people dial things back. And I'm willing to bet that reserves will play a factor in this. They're probably going to start requiring 3 to 6 months, because right now there's a lot of loans where you don't need reserves
Mm.
right now, right? Um, Especially if you're trying to get in, a lot of them you don't need reserves. Um, um, but as we move forward, and because we don't know how long this thing is going to go,
Right.
we don't know how long people are going to be staying employed, right?
Mm.
We can only
Right.
go off what they got right now, right?
Exactly.
Right. So people are going to, banks are going to really tighten up guidelines, and I would expect reserves to be a huge one of those things that they put in place.
Right. Exactly. Okay. So how much longer does it take to close given the pandemic concerns?
It's taking a minute.
The
It's taking
extra
a second.
30, huh?
Yeah. Um, it's really, man. It's really. it's really on appraisals, right?
Okay.
So we got to find appraisers who are willing to go into homes, right?
Right.
And some banks are saying, hey, we'll just do drive-bys, okay, right? Um, but if until we have that appraisal done, until we got to put a hold on the loan.
Wow.
So the
Yeah.
appraisal has to be done. And you got people who don't want to, like if you're doing a refinance, people don't want to they don't want people appraisals coming to their house. They want people because
Right.
they don't know, right? Or if you're doing a purchase in the selling and the seller is still living in the house.
Mhm. Mhm.
Where if you want to sell your house, you gotta let the appraiser in. They like,
Right.
nah, what I'm saying. They
Right.
like, nah,
Very.
we'll just wait. We'll
Right.
just wait. And I mean, if they want to wait, that's fine. That's on them. We just got to hold on the loan. Now, that being said, if the seller is waiting, right, your
Mhm.
lock rate may expire, and then
Oh wow.
you might be charged for the lock rate,
Mhm.
right? I don't know how the banks are going to handle that specific, because either they may charge it to, you really can't charge it to the seller for real. Banks can't really do that and make the seller
Right.
pay.
Mhm.
Unless the seller writes in, hey, I'll pay. So this is a good thing for buyers agents, or for buyers agents. You guys should be writing, if the appraisal is if the seller is holding up the appraisal, then you have to pay for the extension.
Mm.
Make the seller pay for that extension,
Extension.
right? Because especially with the majority of the clients I have, we ain't trying to spend no more money,
Right.
right? We don't got no more money to give,
Thank
right?
you.
Especially if they're going to start requiring those reserves, right? I need this extra money. I don't need to be
Mm.
paying $1,000 for this to keep my rate. I can't do that. I don't
Right.
want to do that, right?
Right.
So
Yeah, it's
those are
pretty
things to think
tough.
of. Yeah, those are things to think about.
Yeah, pretty tough. So with the appraisals and everything, yeah, that's pretty tough. That's a big part of the process.
Yeah,
Right. So,
I mean,
right,
that's the collateral,
right.
right?
So, are there any products you want to share with us that is great for, right now? Do you have any special products you use or,
Well,
you know,
right now,
yeah,
I mean, I got the Fannie Mae. I got the Fannie Mae. I already use Fannie products, so 3% down,
3%
3%
down?
down, right? You're going to have mortgage insurance on it, right? But
Right.
but you don't have to worry about that FHA appraisal, right? We don't have to worry about Section 1. So
Okay.
and it's less of it's less than 3.5%,
Right.
right? And in California, that 0.5% makes all the difference in the world, right?
Right.
Because I mean, if I can save an extra couple thousand, that's that's a big deal to me, at least.
Right.
You know, but I mean, the mortgage insurance is going to be about the same. The difference, and then also you don't have to pay the MIP on the front end. Like, so a lot of times with FHA, they'll put an extra amount of money on top of whatever your loan amount is, right?
Okay. Mhm.
Including a monthly MI. So you get the MIP, right? You get the MIP
Mhm.
um, that you put on the FMIP, I should say, that they put on the front end, right? And they put it on top of the loan, and then you have a monthly MI.
Hmm. That's pretty good. Because,
Yeah,
it's there's a lot of other banks, like Chase, they're requiring like 20% down, which, got a lot
yeah.
of people afraid out here.
But think about Chase though, man.
But 1100.
Chase have been
Okay.
talking about getting out of loans altogether for the last couple of
Right.
years, right? They ain't been trying to lend nobody no money for the last few years.
Right.
They just do it just because they had to. I think they figured this is an opportunity for people to stop coming to us. I don't think they want people coming,
Wow.
to be honest.
Wow. And I think even Wells Fargo was kind of on the same path.
From what I hear, they're contemplating. They're going to do something. See, and even us, right? So we're looking at it, and we're in the we having discussions. They're having discussions about what we're going to do. Right.
Right.
Right now, we haven't really had too many big changes. Right now.
Okay, so that's great.
Right. But we don't know. Next month could be different. And this is really going on by the week by week basis, based off the information we hear from the based off the market, medical professionals, all that plays in the part of decisions that we make.
Right.
I would keep an eye. I would really keep an eye on what Bank of America is doing.
Bank of America.
Yeah, I think if they make really big changes, I think everybody's going to make a huge change, because they're pretty much from my perspective, they pretty much either lead, they're the driving force when there's changes, right?
Okay.
People look at what they're doing, they're making changes because they're probably the most conservative bank in the country.
Right.
Right. So you look at what they're doing and act accordingly.
Right. Yeah, pretty. Bank of America is pretty big.
Mm-hmm.
So is there anything else you want to leave the audience with, like buyers, why they shouldn't be afraid?
You said why they shouldn't what?
Why they shouldn't be afraid to purchase now.
You shouldn't be afraid to purchase now, because buying a home, the options that you have with buying a home. Like, I got people right now that have to figure out a way to get to find a home real quickly now, because there's the person who owns their home, their house that they're renting, is selling it, and the seller wants to actually live in the house. So now we got to figure out. Now they have to figure out where they're gonna live.
Right.
Right. You don't want those type of issues. You don't want those type of problems, because at any point in time, somebody can say, "I don't want you in my house no more."
Right. That part.
Right. Lease or not. Right. Lease or not.
Exactly.
So you gotta have your options open. You gotta have your options open. Being a homeowner affords you those options.
Right.
Also, buying right now, your payment is never going to be more cheaper than it is right now. Right. Everybody waiting for those housing prices to drop, and you can speak to this. It's not going to happen. It's just not going to happen. We got people moving into the Bay. More businesses are still moving into the Bay. It's just not going to happen. So right now would probably be the best time to act on those interest rates, these low interest rates, right, before they go up. And if they go up, we in trouble.
Right.
Mm-hmm. Right now, so jump on it right now.
Exactly. How about for the selling side? Would you have anything to say for the selling side? As far as in selling, do you think it's okay to sell now?
Yes.
Right.
Right. Yes. The only issue is, and you could probably speak to more about this, right? I've been hearing a lot of people taking their houses off the market, right?
Mm-hmm.
So if you plan on moving someplace else, where are you going to move to, right? Because there's not a lot of inventory out there right now.
Right.
So that's the only hiccup I would see. I would say go get pre-approved and secure a home first, get in the contract first, and then sell your home. Unless you already got another home somewhere else, then just sell, because there's always people looking. Right?
Always, definitely.
Especially right now, because the lack of competition.
Yeah.
Right. So nobody, like people who's buying homes, nobody wants to be out there right now. So you can really sneak in. Like
right.
I'm getting a lot of people who are with down payment assistance who aren't getting any competition on home loans or on houses right now. They're putting offers in and they're getting accepted rather quickly. And I know with down payment assistance, it's hard to get offers accepted, right? Because people want their money quick and fast. Right now, those quick and fast transactions have slowed down.
Right.
And so it's right now, it's like the perfect time to go looking.
Okay. Perfect. Now, what about the current underwriting criteria process? How is that working out right now? Like, how's
Well,
that working?
underwriting process is pretty simple.
Pretty simple.
For the most part, you got to find you a loan officer that's has an underwriting mind. First of
First of
all,
all,
that's first foremost, because you
right,
want to know before I put this loan in, you want to know that you want to have confidence in me that it's going to get approved, right?
hmm
So I'm going to underwrite your loan first, right? You're going to give me. I don't even give pre-approvals unless I have all your documents. I need to see everything, right?
right,
I need to know because I need to know. Do I need a letter of explanation up front right now, right? Because it's a time thing, right? If the underwriter comes back and says, "Hey, I need a letter of explanation for this," and it takes me, I don't see the email until because they don't call you. All of them don't call you. Sometimes you get an email, right? And then if I don't see the email right away, I'm screwed, right? Because I'm losing a day. I'm losing a day, and we trying to close. We trying to go. We got a 15 or 20-day escrow. It takes 3 days to get to underwriting. That's so now we down. Now we down to 17 days from 20. Right? I'm
right,
losing a day. I'm losing a day, so that goes that down to 16 days. Right? All that plays in effect. So if I gotta get. That's why I gotta get everything up front. Right? I gotta know. I gotta know what you need.
right,
And I don't care how adamant you are about what you got. I'm not giving you a pre-approval without it. So that's one.
exactly.
That's
Right.
one. I'm not giving you pre-approval
And
without
so,
what I'm asking for.
what are some of the documents that you need to go through the lending process?
So I need
That
2 years taxes.
okay.
I need 2 years taxes, 2 years W-2s, 2 months bank statements, and
Okay.
30 days of pay stubs. If you are self-employed, I'm going to need your taxes regardless. 2 years taxes regardless.
Okay.
Um, and depending on your job, you might be 1099. So I would need your 299s. If you are a corporation, I need your business taxes as well. Um, I need your business taxes as well, because I have to make sure that your business is making money.
Right.
Right,
That's
right.
number
So
one.
you can even if you're on W-2s, even if
Mhm.
you have W-2s, just because you're paying yourself a salary does not mean that your business is going to, be successful the next 3, 4, 5 years,
Right.
right? So
Right.
we have to analyze all of that.
Okay. Perfect. So, what do you see? Well, this is just your own prediction happening in the lending world in the near future. And this is just not a right or wrong answer. This is just something that you think happening.
Um, I think the longer this goes, and I think it's going to go for the way it's looking. I think it's going to go for at least 6 months.
6 months.
Um,
Oh,
yeah,
wow.
at least. Which is I'm fine with me because I'm staying at home.
Yeah.
But
Right.
but I think this is going to go 6 months, and if it goes that long or even longer, I think in the coming months you're going to see a lot of tightening of guidelines.
hmm
It's going to be it's going to be very very hard to get a loan.
Right.
Um, unless you put in, I wouldn't go so as far as to say 20%. I think people might go up to 10.
10. Yeah.
Yeah, but even 10% of 600,000 is 60,
Mm.
right? And if you, I mean, especially living in the Bay Area,
Bay Area prices.
you
Yeah.
can. I mean, you don't want to give up. You don't want to give up sixty
Right.
thousand.
Right.
You don't want to give up 60,000.
Right.
That for some people, that's their whole life savings,
hmm
right? And then you throw in a mortgage on top of that. It's going to be harder to save that up. You know what I'm saying? And if something happens, it's gone. You don't got no reserves,
Right.
right? Um, even though I think even if you have the 60,000, I think they're going to start putting reserves on the back end for it too, because
Backing. Okay.
just so you can float for a few extra months,
Right.
right? So if you got 60,000 and you got to put the $60,000 down payment on, and that's going to clear out your reserves, you still won't get the loan. right? Because you still need 3 months
Mm-hmm.
or maybe 6 months. So again, if you want to get a home, get in right now.
Right now.
Why it's favorable for you, right?
Right.
Otherwise, it's gonna be. I think it's gonna be difficult.
Yeah. Okay. So no one really knows what to expect.
Nobody knows what to expect because
Nobody
I
knows.
mean,
Nobody knows what's
right? You
going to
can't
happen.
plan for something like this. You can't
Right.
plan for something like this. Um, it's never happened in modern America or modern times, right?
Right.
I think the Spanish flu was like 1916, but like
Really.
yeah, the Spanish flu was like 1916 and 1917. It's one of them. But I'm saying even then, look at where technology was then and where technology is now.
Yeah.
Look at
Yeah.
the modernization of medical of health and medical in the medical field now,
Right.
right? They didn't have all that. So for us to try to predict something now like this at this magnitude, that's
Right.
crazy. That's mind blowing to me, right?
Right.
So I don't think there's nothing you can prepare for.
Hmm.
And that's why the guidelines are going to be clinching,
Clinching. Yeah. That's
tightening up.
really tough. You know,
Hmm
that's that's tough. So right now is the right time to
Definitely the right night
purchase,
time.
of course. You know, at
Hmm
least prepare to purchase. So with that being said, did you have anything else for us today? Anything inspirational? Any other products?
Any other products? That's the main one.
That's the main.
that three
Okay.
that 3% down. That 3% down is the main one. Now, I do want to tell you. So, if you do have residual income, right? So at that, when I mean by residual income, I mean any amount of money that you have after you pay your bills, and by bills I mean the money, whatever debts you have on your credit report, right? If you
Mm-hmm.
have, if you have, um, if you have that money in residual income, I can move your debt to income ratio up by 5%.
Oh.
Then it goes in increments of from 4 to 5, from 5 to 6, and from 7 to 8. And then at 8, if you have $8,000 in residual income, I can pretty much give you anything I want.
Right. Okay. Well,
Right?
that's great to know for some of the
Yeah.
interested buyers as well. And
hmm
when we start talking about low income, so how do you feel now about the Section 8 vouchers?
I think it's amazing. I
Okay.
love it. I be
So
trying to
it's great to do
I
that
be
as
trying to tell people. I be trying to tell people, man, if you got Section 8, man, you got gold in your
right.
hands.
Right.
Because you know what I'm saying, because it puts you. Now they don't pay the whole. They're not going to pay your whole mortgage. They're going to pay a certain percentage, right? But
Right.
you'll be surprised how much buying power you can get with an extra $400 or an extra $300 to $200, right?
Right.
Everybody can use that, right?
Right.
And then for you, if like I have a client right now that was getting ready to use it. I think she was making 25 or 5,000. She was making 5,000.
Mm-hmm.
That extra $400 they were giving her took her from 500,000 to 550,000, right? And she was able to find a house, a house in better shape that she didn't have to fix up. So eventually, it really saved her a ton of money, right?
Oh,
Because of the area she was buying in, 500,000 wasn't really helping
right.
her. Right? Right.
That's amazing because I know
Mm.
there's a lot of people in Section 8 that just don't know how to go about um
Talk to your people. So
talk
go
to
talk to your people. Go talk to the people at the Section 8 office.
hmm
Tell them you want to buy a home, and let them work for you.
right.
Right? And then you can take it to. I mean, you can really take it to any lender you want. Right?
Right.
I know for a fact I use it though.
Exactly, right? Build a
Yeah,
builder's experience with it.
yeah, and I know how to
They
use it.
take
So.
care of you.
Mhm.
Exactly. So yeah, that was one of the major things for me in the credit score. A lot of people were concerned about a type of credit score you needed, and
Mhm.
that was one of the major things. That's where a lot of fear come in, and knowing how much to put down, and so that's those were major keys that we talked about.
Yeah. Credit. I mean, credit scores are an issue. I mean, you wanna be around. You kind of want to be around 620, 630. even 640.
Okay.
That's where you want to be ideally.
Mhm.
But if you got a 580, we can still do 3.5% down with FHA,
Oh, okay. Well,
right?
that's
As
good.
long as you don't got no collections, right? You
Collection.
gotta pay. Yeah, you gotta pay those collections off, um, and you don't got no like outstanding bills, right? Medical bills are one thing, but the car note that you owe on that you didn't pay, right? And they repoed that, you're gonna
Repo.
have to pay that off.
Student loans? How about student loans?
Student loans. So student loans are difficult to come around to get around, but um, you gotta know how to play the game. So there's different lenders that have different guidelines in student loans, right?
Okay.
Some lenders will look at student loans, and if it's in forbearance or in deferment, they'll say, "Hi, is it going to be in deferment for at least 1 year?" Right? And if it's going to be in deferment for at least 1 year, they'll say, "Okay, we don't count those." These are some lenders, and it's very few.
Mm.
Most lenders, as well as the government, for Fannie and Freddie and or FHA, they
Okay.
require you for 1%. They're going to tag on 1% of whatever that student loan is, right? So if you hold 100,000,
Mhm.
right, 1% of that 100,000, and then they were going to make that your monthly payment,
Okay.
right? 1% of 100,000, I want to say is like $1,000,
Okay.
right? So that's $1,000 a month that they're going to put onto your debt to income ratio. Pretty
Mhm.
much takes you out, right? So it's very difficult to get around. The best way to get around it though is to call the student loan, right, people, and say, "Hey, I want to take my loans out of deferment, right? And I want you to give me a payment, right? You got to make sure the payment is amortizing over the life of the loan, right? So you can do one of two things.
Mhm.
You can keep the same, like let's say the repayment period is 30 years.
Mhm.
You can keep that 30-year repayment period. Take the $400 to $500 payment, right? Take the $400 to $500 payment, and
Mhm.
we'll use that instead of that $1,000.
Right.
Or you can or you can say, "Hey, I want to stretch this out from 30 years, and I want to stretch it out to 60 years as far as I can stretch it out," and it gives you a lower payment. Because the
Okay.
lower the number, the lower that payment is, the higher that your lower your debt to income ratio will be.
Okay.
And that's how we beat that.
Mm. Okay.
Right?
Okay.
That's
That's
how we beat
a
that.
good answer.
Hmm.
Yeah. It gives people a clear understanding of how it works and
Hmm.
everything like that. So, if someone was interested in working with you, Philip, how could they get in touch with you?
You can call me. Phone number 616-710-7616. I always answer my phone. If I don't answer my phone, you call, the next people you call would be the police.
Right. Right.
Right? Um, because I always answer my phone. Um, Second, you can hit me up on my website. You can go to philbuilderlender.com, and you can actually fill out an application. It's a link for you to fill out an application. You can get to
Okay.
philbuilderlender.com.